But let's shift the focus now on Zee Entertainment. The latest in this saga is that Zee promoter Goenka has moved to the Securities Appellate Tribunal, or the SAT, against Sebi's 8-month ban from holding key managerial posts in the Zee-Sony merged entity. To discuss more on this, Karan Taurani, the Senior Vice President, Research Media Analyst at Elara Capital, is joining in. Karan, this has become such a big drag. I think we've been talking about this merger for the last 8 months now. And once again, there are perhaps more delays in place. And if you map the stock, right, initially there was this sort of jubilation about the merger, but then everything sort of fizzled out. I mean, the last 1 year, the stock has done nothing. Do you expect more delays? And what's your view on, the latest developments?
Right. Hi, Sonia. Morning. So I think if you look at, what has been happening, it is clear an attempt, by Mr. Goenka to try and make sure that, he should be a part of the KMP and the merger should go through with him. But clearly, with Sebi, kind of given their verdict that, the decision may not come before 8 months because of more investigation needed in this case, it seems highly unlikely that he could get some kind of a relief in the near term. So I think it is obviously a methodology wherein he will obviously try his best, for him to be a part of the merged co. But what we, primarily believe is that, we don't foresee Sony waiting for 8 months for the merger to happen. We believe that there's a higher likelihood in this kind of a scenario for the merger to go through without him, because the decision will come after 8 months and Sony may not wait that long. And as far as Mr. Goenka is concerned, he's obviously come out in open and said very clearly that the merger will not be delayed further, just primarily because of his issue with Sebi and SAT.
Okay, so Karan, basically you don't see any hiccups because of this. Do you think this will be a fight that Mr. Goenka puts up parallelly, X of the merger, and merger goes on and maybe a different person takes up the mantle of the CEO?
Yes, absolutely. I think that's what we've been maintaining, that, the merger is very much on track with or without Mr. Goenka. I think, they should start, submit the application at ROC, this approved NCLT order, and the process will, kickstart then. And I think it's about a 6 to 8 week process wherein I think for 4 to 6 weeks, Zee will get delisted and then you'll have the merged co, Sony Zee getting relisted. So the entire process is about 2 months odd. And by first week November, if everything goes well, we should see the merged co getting listed.
Okay, so the merger will go ahead with or without Mr. Goenka. Got that. So once the merger, once this, of course, goes through in its entirety, what does this mean for the stock? Because, like I was mentioning at the start, right, the stock has done nothing. I think if we can just pull it up, it was a year ago, it was 250 rupees. Now the stock is at 265. So for the average retail investor, when do you see that sort of pick up in the stock?
So I think one thing is there right now that, there is some sort of uncertainty in the investor mind that, there could be a further delay on this merger because of Mr. Goenka going to SAT, for, appealing against this Sebi order. But potentially, we don't see that as a risk whatsoever. So that's one thing, which is not there in terms of a big risk for now, as per our view. Second thing is that, there is also some uncertainty around this delisting process in terms of, how things will happen, because this has never happened that, like 6 to 8 weeks, a company gets delisted from the exchanges and gets relisted. So I think that's some uncertainty on the retail investor mind as well. So I think once these roadblocks are more or less cleared over the next 2 months, there is definitely a high likelihood of the stock reaching 340, 350 levels. And that's primarily because of the valuations. That's primarily because of the MNC company coming in, better corporate governance issues, the entire merged co synergy that we've been talking about. So I think there is a good amount of 25-30% potential upside from current levels as well. But it may not pay out immediately in the next 1 to 2 weeks. It may take 2 or 3 months to play out. But that is very much on the cards.
Karan, since we have you with us, let me throw in Sun TV. I don't know if it's under your coverage or not. Do you cover Sun TV first of all?
Yes, we do cover Sun TV.
Okay. Stock's been running. It's gotten really active, some 12-13% up this month itself. Also active in F&O, our colleagues tell me. Any thoughts here?
So Sun TV, I think, is a very compelling story. I think, we've been pushing this stock since, more than 2 years now. But what has happened in Sun TV is that, IPL revenues have come high for all the companies post the media auction rights which were there. And Sun TV anyways is making very good profitability, about 60% EBITDA margin, which is highest, versus peers. So if you value Sun TV, excluding the cash and excluding the IPL business, which is somewhere close to $1 billion odd. The core TV broadcasting valuations was around 3.5, 4 times, before this up move happened. And currently the valuations are about 6 times for the core broadcasting. So I think there is still potential upside of almost 25-30% on Sun TV, primarily because of re-rating of the core broadcasting business. Now, the only thing is that, in broadcasting business as such, they haven't expanded towards digital. They're not investing in fresh content. They're not investing into originals for Sun Next. But the profitability remains to be very high. So if you compare them to any other broadcasting giant, I think they are the highest in terms of profitability. So I think that works well for Sun TV.
Let me just extrapolate that question on ad revenue and just ad spends overall for the TV sector. Are you expecting the rest of the year to be pretty buoyant? What's the increase in ad spends on broadcasting? And also a quick view on digital, the way spends are just shaping up, and what do you expect for the next couple of months?
Broadcasting ad spends, I think, they've seen a very sharp recovery in the post-COVID era. I think last year they were at close to 95% of pre-COVID. And this year there's been some sort of a decline again on a Y&Y basis. And this year, in FY24, we assume that they will probably breach again towards that 95-96% mark of pre-COVID levels. So they haven't seen complete recovery as far as pre-COVID is concerned, but it's one of the resilient medium today in terms of traditional media. Also, a lot of things have worked unfavorably in terms of the external environment for them. And that's the reason, for them not coming back to pre-COVID levels. But I think the festive season for the next 2 months is going to be very strong. You are going to see new launches. You have this combination of, festive and World Cup. And plus, a lot of these FMCG companies will also start to spend more aggressively because they've been waiting for inflation to cool off. So I think putting all these things in perspective, TV ad spends will see a respite in H2, and many companies will also see a benefit basis that.
All right, we'll leave it at that. Karan, thanks a lot for joining in. I appreciate your thoughts here. That's on the media stocks and the way forward. By the way,